Welcome back everyone to my world of stocks. In today's video, I actually want to start a brand new series on the channel and I want to hear your thoughts on it. I want to see if you guys like this, but here's my idea. So I tend to get a lot of comments asking me to do review videos for a ton of different stocks. And sometimes those are very good, high quality stocks that I can easily make videos about. They're popular stocks. Sometimes I can even include them in my various stocks to buy type of videos on the channel. But other times, they're very risky stocks, maybe stocks that I haven't even heard of myself. They may not be as popular. They may have a lot of future potential, but they may also be very high risk at the moment. They may be crashing by a giant amount. They may also just not have a lot of information about them on the internet for me to do high quality research on them. And so it's just not as easy to make videos on them. I just don't feel as confident dedicating an entire video to some of these different types of stocks on the channel, even though a lot of you want to hear my thoughts on it. So I have this idea. Why not just start a brand new series on the channel, call it Stocks That My Viewers Want Me to Look At, and then put the name of the stock. And I can just be very transparent and say, look, this may not be a stock that I'm particularly interested in myself, but it's a stock that my viewers want to hear my opinion on. And so I'm just going to do a quick review video for you guys, do the research on it to the best of my ability based on the information that I can get, and just give you that quick opinion on that stock and let you know how I feel about it and just do a quick video for it, which I actually think is going to be a really fun series for the channel because we might even find some hidden gems here and there. We might look at some really abstract stocks that I wouldn't otherwise get to cover. So I just think it's going to be a ton of fun, but I'd like to hear your feedback on it. Do you like this idea? Let me know down in the comment section or by hitting the like button. And if it's, if this video is received well, then I'll continue to make more of these for you in the future now and again. So anyway, that's my idea. In today's video, it's going to be kind of a pilot episode. It's going to be the first episode. And this one is going to come from a viewer named Matt Dempsey, who said, "Great video as always, Ale. Please your thoughts on YY stock, Chinese social media with big dividend." And so that's the stock we're going to look at in today's video. I've actually received several comments asking me about this stock, but this is a China-based social media company that has been crashing into the ground. I mean, it's been really struggling. And what's interesting is they actually pay a giant dividend, which is very rare for a social media company alone, but it even has a very high yield on it, which is pretty crazy, at close to 8%. I mean, that's just unheard of in the social media space, and especially in a Chinese kind of speculative social media company. It's very interesting. So I thought this would be a great stock for our first pilot episode. So let's go ahead and take a quick look at the company. We'll talk about the stock, that dividend, and I'll give you my thoughts on all of it. Let's go ahead and dig in here. Okay, so let's start with who this company even is and what do they even do. Well, Joyy was founded in 2005 in China and is a social communication platform that really uses voice, text, and video to form online group activities. And these activities can range from music to games to streaming to even education, broadcasting, and even online dating. Now, this is broken up by several different apps and platforms, with two of the biggest being Likey, which is a short form video platform that is very similar to something like TikTok and really aims to be a competitor to them, with already 57 million monthly active users and a global presence across the Middle East, Europe, and various parts of Asia, among others. And the other is Bigo, which is a large live streaming and gaming platform that includes social media, chatting, and connecting, and of course gaming, with already over 30 million monthly active users, a global presence across North America, Europe, the Middle East, Latin America, and various parts of Asia. And it was even ranked as a top 10 highest monetized app in the world by consumer spend, which is pretty impressive. And coupled with the giant phone and internet usage that really skyrocketed during the pandemic, well, Joyy was able to see explosive growth in not just their user base that apparently reached over 200 million users across 150 different countries, although I couldn't really find a breakdown for all of these users across their apps, but that's at least what they claim to have. And then it's also led to giant growth on both the top and bottom line over the years, as they've even become largely profitable up until last year, where they saw a rare dip back into negative territory. But adjusted cash flows were still positive, and overall, it's extremely impressive and frankly quite rare for a smaller and younger social media company to already be profitable. I mean, that's something that not even Snapchat, which has been around for a long time in social media, Snapchat has not even been able to achieve that. They are still not profitable. Even more surprising, though, is that those profits have allowed them to not only pay a giant dividend, but they've also used those funds to buy back a ton of their own stock by an even larger amount, which may indicate that management thinks that the stock is severely undervalued, as it's been crashing super hard over the past year. Now, to be fair, Joyy actually performed really well at times, almost reaching $150 per share on multiple occasions, but with all of those spikes also came some very deep crashes, with this latest one sending the stock price all the way down to just the $20 range for over an 80% crash. With that monumental crash, though, also came a falling valuation with a rising dividend yield that are really two of the biggest reasons why so many people are talking about the stock now, as it currently sports a price to sales ratio of less than 1, which is always considered a great value for a PS ratio just in general on high growth companies that are maybe not yet consistently profitable, but they also got a rising dividend yield out of it that has now climbed all the way up to almost an 8% yield, which again is completely unheard of in the social media space. However, as good as all of that stuff might sound that we've just run through, there are some giant red flags still with the company and the stock that I think everyone should be aware of before even considering buying this stock. So let me just quickly run through the biggest ones that caught my eye, and then I'll give you my overall conclusion right after that. Okay, now first of all, that dividend, which is the biggest reason why I've seen so many people talking about the stock and wanting to buy it, well, it's not very safe at these levels. I mean, you're talking about almost a 300% payout ratio, which is not sustainable for really any company, let alone a speculative social media one that saw profits actually turn negative last year. And even if we use adjusted earnings, it still tops out at over 80%, which means at the very least, it's really, not going to be growing much at all from these levels going forward. And it may even need to be cut at some point so that they can spend more money on advertising to grow their user base, which is very important when it comes to social media. And I'll talk a little bit more about that in a second because it's another big red flag. But to be fair, management did say back at the end of 2020 that they would pay this dividend for at least 3 years. So technically that would at least last another 1 more year if they actually keep their word. But that's not always guaranteed, especially when you're dealing with, somewhat shady Chinese companies. Speaking of which, Joyy has had tons of controversy surrounding them as a company and a business over the years, which doesn't really make for a super trustworthy stock and, doesn't make you have the most confidence in management. Back in November of 2020, for example, now they announced that Baidu was going to buy their Chinese live streaming service for over $3.5 billion. But soon after, Joyy was accused of accounting fraud by an investment firm called Muddy Waters that claimed as much as 90% of their user base and their financials were fraudulent. Now, to be fair to Joyy, that firm was actually short selling the stock, and since then, no legal action has been taken, at least not to my knowledge. And Joyy has also denied all of those claims, and we've even seen a bunch of other investment firms criticize the report and actually defend Joyy. But it was still a big 70-page report that should probably be looked deeper into if you're thinking about buying the stock. But again, because nothing really came out of it, I can't hold that against Joyy. It kind of has to be thrown out in my opinion. Apart from that though, Reuters also reported the next year that the Chinese government was blocking the Baidu acquisition. And since then, I really couldn't find any kind of credible information or even any information at all on the internet as to whether or not the deal has actually gone through. All I could really find was in their earnings report, in the fine print, Joyy says that they are now counting their financials as if the deal has gone through, but they don't give any kind of like official update on it, and I haven't seen any reports from Baidu either mentioning it. So I have no idea what to make of that or how much it'll impact their business going forward. And on top of all of that, Joyy was also a high flying growth stock during the pandemic, but the reason why the stock has been crashing in the first place is because users and financials have started to plummet ever since the pandemic started to kind of die down and people were less glued to their phones under government lockdown. For example, in the latest earnings report, global users fell by over 11%, while their super important TikTok competitor Likey saw almost a 40% crash in their user base as well. As a result, revenue growth is crashing from over 100% growth in 2020 down to 36% in 2021, down to negative 8% this year, and then finally seeing a small recovery of 7% growth expected next year. But only 7% growth is pretty small for a company that now has a forward PE ratio of close to 100. Again, though, you have to put this into context because the PS ratio is still below 1, which is really good. And if they can return to their former growth rates, then that PE ratio will fall dramatically again too, since their trailing PE is only 36 compared to 95 forward. So you can see how, earnings could rise and the PE ratio could drop dramatically too. Plus, analysts seem to be bullish overall on the stock as it trades about half what the average analyst price target is. But overall, I just feel like there is so much going on with this company that I can't even really make sense of it all to actually invest in the stock. And you guys might have been scratching your head during this entire video too, just because like 1 second I'm showing you amazing statistics that make it seem like a screaming buy, a giant buying opportunity for the stock. And the next I'm showing you something that makes it look completely uninvestable. So what do you do? Well, personally, and this is just my own opinion, but I do think that it's an attractive stock, but only as a super high risk, very speculative Chinese stock. So if that's exactly, particularly what you're looking for, some high reward potential, but, you're willing to accept the high risk of it and being a Chinese speculative stock, well, then you might want to do some further research on it and then maybe you could consider buying it. But for me, look, I already own Alibaba stock, I own Tencent, I own Baidu, and as much better and larger companies as those are, that's already reaching the risk tolerance for me when it comes to Chinese stocks. That already is high risk enough when it comes to owning Chinese stocks. Plus, when it comes to Joyy specifically, you not only have the risk that you take on from owning a Chinese stock, which there are so many things to think about and consider there, but also just on a company specific level, I can't even get some clear, definitive answers to some of my biggest questions on this company, including whatever happened to the Baidu acquisition and is the dividend safe? And because of that, there's just no way that I can gamble on this stock. For me, it is uninvestable, unfortunately. But that's just for me personally. You guys might have a different view on this. So I'd love to hear your thoughts. Let me know down below in the comments section. And hey, did you enjoy the first episode of this series? Did we get to look at a stock that maybe you otherwise wouldn't have heard of? I'd love to hear your opinion on that too. And if there's any other stocks you want me to do a video on for this series in a future episode, let me know that too. But anyway, thanks again for stopping by. Thank you for all the support, everyone. It means a lot to me. Hope you're all doing well. And I will catch you in the next video. Take care. Bye-bye.